Hello everyone, it's Ken Angst with Hope Properties MV, the Angst Real Estate team. We are coming live from Wholesale Mortgage. We are with one of our lenders that we work with quite a bit, and we're doing rapid fire. Her name is Elena Boland. How's it going, Elena?
Hi everybody, Elena Boland, Wholesale Mortgage.
So we're going live today, something kind of new that both of us haven't really tried out, but we thought we would do it. And the reason why I'm doing it is our goal from our perspective as a real estate agent is connecting all of our subscribers with the top people in the industry for the different organizations out there, so to help our clients. So rapid fire today, are you ready?
Hey, I'm ready.
All right, so first give us a little background about yourself.
Been here in Reno for about 15 years. I came here for my job actually, and love it. It's one of the most rewarding jobs because the main feature is that I get to help people, and it's helped me meet a lot of people in our community and connect with them in a really deep level that I'm proud of. I love this job. It's great industry.
Yep. So can you give us a little overview on what interest rates are doing? I know that there's been a big run up here in the early spring, but if we're looking like a 30-year fixed, I'm not going to put you exactly on the spot on what it is, but is it low threes, or what are we talking about for the different FHA, VA, and conventional?
Any government-based or government-backed mortgage, meaning a VA loan for a veteran, a USDA loan, or an FHA loan, those are in the high 2 range. Wow. Conventional loans, however, are a little bit higher because ironically, even though you put a larger down payment into place, you lose the government backing. So it's just basically on the shoulders of whatever bank lent you that money. And that's why conventional rates are always a little bit higher, but they're still doing great, about 3.25%.
3.25, okay. And obviously we don't know about the future, but that's of today. I mean, I've seen some huge movements in the market in the last couple weeks, so it's probably pretty painful for you and some of our clients, but still 3%. Yeah. I think the average when I was looking over the last 40 years is like 6.5. So,
so we're doing good.
People get spoiled though at 2.5.
Right.
So rapid fire continuing. What is the difference between an independent mortgage person like yourself versus the online banks and lenders?
Most of those lenders come from a retail side of the lending industry, which just means that they work for a bank in the background or sometimes directly a bank. And they have a wide variety of products in those institutions, but an independent mortgage broker's main and only focus is getting the best interest rate for a client, and we only focus on mortgages. So of course our expertise level is forced to be a little higher in that way because that's all we do every day. Okay.
Is there a difference? Is there a difference with service, or is there a difference with rates between those? Or
the answer to that is yes for both. The service again comes down to being in the local community because we're underwritten here. The loans are funded here instantly the day that you sign. Everything is definitely more central and localized. We're all in your community. I've done a lot of loans for my kids' parents. The sports teams and everybody at the school, the teachers, etc. We're definitely localized here, and we try to get ourselves into the community and volunteer just like I know you do as well.
Great. Yeah, because one of the biggest things right now, especially in this environment, when people are putting offers in, is it helps if the seller's agent and the sellers know who the lender is.
Absolutely.
Because if there's a relationship there, we've had quite a few of our deals accepted because of the relationship our preferred lender list has. So that's important. I can tell you that right up front.
Yes, absolutely.
One of the biggest things that gets confused in our transactions often, and I'd like you to kind of speak about it, are what is an appraisal versus a home inspection? There's some confusion there.
Absolutely. So a home inspection is handled by the real estate agent, and they go through and they kind of comb through the home.
Home inspector, sorry.
the home inspector.
Right.
They go through the home and they pick apart the home. That's their job, truly. Right. They'll pick apart a 35-cent light plate switch cover, and that's their job, again, to go through and cover it. But that's not anything that's required to be repaired.
Okay.
An appraisal is very different. If you are obtaining a mortgage, an appraisal is typically a requirement of your loan, and anything that an appraiser calls out to be repaired is going to be required to move forward with that loan. Another piece to that is sometimes appraisals don't come in at the sales price.
Now you're beating me to my point here. What happens at that point? Because it's happening in this market because the market's going up. We see appraisal waivers, but what happens if it doesn't appraise? That's a very good point.
There's a couple things that you can do. You can just pivot. That's what we try to do. We have our clients warned, what's the next step to do and to look for if that comes up. Now, you cannot cover the gap typically right now with the seller. It used to be in other markets, the seller would drop the price, but you're not really going to see that right now, unfortunately, because there's a big line of people ready to purchase the home. So right now, you as a buyer, you have to get a little creative in how to fix that problem. So you can put less down, of course, or you can come up with the cash in difference. A lot of people, we're just coaching them, look, if you've got 20% down, maybe let's offer a little bit higher, put 10% down, and then you've got that extra 10% down, and you might pay a little over, but considering our national average appreciation rate at 7.5%, most people make up that difference in 3 to 5 months. So that is really substantial, and there you're in as a homeowner.
Right now, get the interest rate that's good, and make sure that you can afford it. I mean, that's
Absolutely.
The big thing. What is the biggest challenge right now in your industry for lending money to clients? What is
I feel like it's the lack of education out there for consumers. Unfortunately, in high school, things like mortgage and home buying and tax preparation are not covered. So that's a big goal of mine, is to help get myself into the high schools. We've actually initiated a little bit of that, and that
fantastic.
It's in the works. I'm super excited about it because
so that's why it's part of fun doing live, is we had bad connection. There you go. So
I just tell everybody, listen, there's no bad question, because if I left this industry for 30 days and I came back, I would feel lost. There's constant changes. So I always tell everybody, yes, do lean on your family and your friends for help and support, but sometimes if it's been 5 years since they've obtained a mortgage, then you need to talk to your professional and have that close relationship so you feel comfortable to reach out.
So thanks for coming in and putting up rapid fire. New thing that we're going to try and do is put people on the spot, and most importantly, what we're trying to do as your realtor or your real estate team is connect you with the best people in town. So give us a call if you have any questions, or Elena, what's your number?
775-825-1600.
Okay, and you can always call us or text us, and I can give you her information, 775-525-0309. Till next time, you guys take care and have a good week.
Thank you.